let me introduce myself. My name is SURYANTI with NPM 224111110 from Management Class 22B. Here I will explain the material tax collection system, types of taxes, tax rates, tax functions, so. Tax collection system. The tax collection system in Indonesia is a mechanism that thoroughly regulates the tax calculation, payment and reporting processes that every taxpayer must carry out to the state. In this system, there are various rules and procedures that must be obeyed by taxpayers so that the taxation process runs in an orderly manner and in accordance with applicable regulations. In general, the tax collection system implemented in Indonesia is divided into three main types, namely the self-assessment system, official assessment system, and withholding assessment system. Each of these systems has different characteristics, procedures and roles in the tax collection process. The following will explain in more detail the three tax collection systems and how each system is implemented in the context of taxation in Indonesia. Tax type. Taxes are obligations that must be fulfilled by individuals and business entities to the government as a form of contribution in order to support the country's development. This tax is not only the country's main source of income, but also plays an important role in funding various public programs and services, such as education, health, infrastructure and security. The taxes collected will be used to provide public facilities and services that benefit the entire community. In Indonesia, the tax system is classified into several types which are differentiated based on collecting institutions and their nature. The following is a detailed explanation of each type of tax that exists. Types of taxes based on collecting institutions. 1. Central tax. Central taxes are taxes that are directly managed by the central government through the Directorate General of Taxes, DGP, under the Ministry of Finance. This tax includes various types of taxes paid by taxpayers and the proceeds go to the state treasury to finance national needs. Some examples of central taxes include times income tax, PPH. This tax is imposed on the income earned by individuals or business entities throughout the year. Times value added tax, VAT, tax imposed on sales transactions of goods and services at each stage of production and distribution. Times sales tax on luxury goods, PPMBM, special tax for sales of goods that are classified as luxury, such as motorized vehicles or branded goods. Times stamp duty, tax imposed on certain documents, for example contracts or agreements as legal evidence. 2. Regional tax. Regional taxes are taxes collected by regional governments at the provincial and district city levels. The proceeds from this tax will go into the regional treasury to finance development activities that are directly related to local interests. Examples of local taxes include times land and building tax, PBB, tax imposed on land and building owners as a form of contribution to the value of their property. Times advertisement tax, tax imposed on placing advertisements in public areas, such as billboards on highways or strategic places. Types of taxes based on their nature. Direct taxes. Direct taxes are taxes paid directly by taxpayers to the government, without intermediaries. This tax is imposed based on income or ownership of assets owned by individuals or business entities. Examples of direct taxes include times income tax, PPH, imposed on any income earned by individuals or business entities. Times land and building tax, PBB, imposed on land and building ownership as a form of contribution to property value. Indirect taxes. Indirect taxes are taxes paid by consumers when they purchase certain goods or services. This tax is often included in the price of the goods or services, so that the payment is not made directly by consumers to the government but through third parties, such as sellers. Examples of indirect taxes are times value added tax, VAT, imposed on almost all goods and services in the distribution and consumption process. Times sales tax on luxury goods, PPMBM, specifically applied to luxury goods, such as classy cars or luxury jewelry. Tax function. Budgeter function, source of state revenue. Times the budgetary function or revenue function is the main function of taxes to become a source of state income. Taxes collected from the public are used to finance state expenditure, such as infrastructure, education, health and other sectors that are important for the welfare of society. Times example, income tax, PPH, and value-added tax, VAT, in Indonesia contribute greatly to the state revenue and expenditure budget, APBN. To a regular function, settings. Times taxes also function as a tool to regulate and control the economy and people's behavior. By regulating taxes, the government can direct people to reduce or increase consumption or production of goods, protect local industry, and maintain economic stability. Times example, high taxes on luxury goods, such as cars and luxury homes, aim to control consumption of these goods. The implementation of a carbon tax also encourages companies to reduce emissions that pollute the environment. 3. Income redistribution function. Times the redistribution function means that taxes are used to equalize income and social welfare. Taxes collected from high-income groups will be used for social programs, subsidies, or development that will benefit the wider community, especially those with low incomes. Times example, tax funds are used for health insurance, education and social assistance programs which directly help disadvantaged groups.
My explanation of the material, I hope it's easy to understand. Thank you. Waalaikumsalam warahmatullahi wabarakatuh.